Welcome back. Netflix is set to report third quarter results. That'll be tomorrow after the bell. Joining us now with his expectations, Guggenheim Securities entertainment media analyst Michael Morris has a buy rating on Netflix. His price target is $14.50. Just taking a look at where the stock is. Oh yeah, $12.24. All right, what are we expecting, and sort of what are you going to be focused on in terms of the metrics, given they don't tell us sub count anymore the way they used to?
Sure, you're exactly right. They don't, and that's been a bit of a sticking point for those of us who like to analyze the stock, but they've pivoted to engagement, which is the amount of time spent with the platform. And when we think about the core business and evaluate how it's performing, engagement has now become the most important metric, and that's been a bit challenging for them over the last several quarters. It hasn't been bad, but it hasn't been as good as we would have hoped given the strength of the business. That's going to be a primary focus, and we do think that that trend improved in the third quarter. So that's where our expectations are right now.
All right. And why do you believe that trend improved in the third quarter, Michael?
Sure, absolutely. We look at a number of data sources, including information disclosed by the company. They highlight their top performing titles, and this quarter they had a very strong slate. It kicked off late in June with the most recent season of Squid Game. They had Happy Gilmore, and then they had a couple of very big hits in the quarter, one with Wednesday, and of course there was K-pop Demon Hunters on the film side, which was a very significant contributor. So the data we look at indicates that trends are strong and healthy, and I think that getting that comfort with the core business is a great first step to think about where the company can go from here and why we're bullish on it.
I watched Wednesday. What a weird show, but weirdly addicted as well. I'm surprised at how big of a hit it is. But I'll be looking for any signs of the numbers. I know they give snippets around what demand looks like. Just curious, Michael, not necessarily related to quarterly earnings, but we've gotten this look at Sora 2 from OpenAI. Is the AI-generated content a threat for a Netflix, which spends so much on content?
Absolutely. Is it? I don't know. That's the question, right? So when we think about earnings, we just talked about one of the most important things, which is how's the core business trending? We're looking at engagement and financials. Second, we're looking at the changes in the environment, and this discussion about AI content creation is absolutely huge, and I think there's some pros and some cons. When we think about the potential, and it's an uncertain future for AI content creation and what it means for efficiencies, what it means for competition, we do think that platforms and brands, IP, are going to be key to sort of cutting through the clutter. And Netflix is an incredibly strong platform. They're starting to build out their IP in a really meaningful way, and we think that's an opportunity. At the same time, one of Netflix's largest competitors is YouTube. It's a lot of short-form content, and the question becomes, if there is even more quality short-form content created, does that create an incremental competitive threat? So I think this is a question that Netflix has to answer, and when we think about earnings, they are trying to compete with new revenue streams and new engagement opportunities, and that's probably the third leg of the earnings stool, if you will.
I think that's one of the more interesting aspects of how they're harvesting new creation, new content creators. Michael, Mr. Beast from YouTube, this rewatchables Bill Simmons stuff was interesting in the last couple of weeks. Are you drawing some clues or lessons from that strategy?
Absolutely, we are. I think that Netflix is very clear that while the market talks about them being the winner of the streaming wars, which we've never really loved that term, Netflix says that they never rest, and they think it's dangerous to. You'll hear their co-CEOs talk about that. So when you look at some of the things that they've announced, even intra-quarter or within the last 6 months that should take effect going forward, they've done a partnership with live content in the form of TF1 in France. They just announced this Spotify partnership for some exclusive video podcast content. They announced bringing games, which they have had on their mobile devices, onto the screen to drive more engagement. And of course, they have started to sort of pick off some of the top performing short form content creators to make Netflix content. So I think we're just at the beginning of what they do. I'll just tell you, I think that they will make an investment in the NFL. In the next cycle. They already have the 2 games on Christmas Day. I think they'll make a bigger commitment there as well. That's my prediction. And so they are not resting on their laurels at all, and that's something to be excited about if you're an investor.
It'll be interesting, of course, to see who steps up for the NFL when that contract comes up a number of years from now as well. Interesting point. Michael, thank you.